Do you have any like success stories, any stories stand out where you're like, oh yeah, we were able to help this family?
We had a member and they came in and they were just struggling to make ends meet, but we were able to really change their lives and put them on such a better path, and they're in a significantly better financial situation now.
So JT, when we're looking at potentially getting a home equity loan or line of credit, what are the risks that we want to be aware of?
So I think there's two different categories of risk, right? You've got your home equity line of credit. Some of the risks there is it's a variable rate, which means that rate can go up, it can go down, and that's going to impact the payment as well. To give you an example of the impact that can have, when we saw a lot of our members that had a home equity line of credit, when rates increased since 2022 to now, some of their payments have doubled and even tripled from what the original requested amount was. So that's definitely a risk that's there. When we look at the fixed home equity loan, the risks is you can't change that dollar amount. So if you get that loan for something specific, you need to replace your roof, you need to put a pool in, you're finishing your basement, but that dollar amount changes after you've pulled that loan out. It's very hard to go back and then refinance that, pull out additional cash. And so that really makes it a little bit tricky in that situation.
Okay, so just understanding what your need is.
Definitely.
Right? How you want to use your home's equity and figuring out what's right for you.
Yeah, asking as many questions as you can up front and being as forthcoming as you can with the details. That way we can make the best recommendation on what's going to be good for you.
Okay, love it. Okay, so JT, when we're looking at getting a home equity loan or line of credit, what are the benefits?
So if we look at a home equity line of credit, the benefits is it's extremely flexible. So let's say you need to take out some money, but you don't know how much you need it for. You can request a much larger line, but you're only making payments on what you actually pull out.
Okay.
So if I get a $100,000 home equity line of credit, but I only need $10,000 for some home repairs or $20,000 to put in a pool, I can use that amount, and if that amount needs to increase, I can pull out additional, kind of like a credit card. I just keep using it as I need it. And the nice thing is you only make payments on what you've actually pulled out. So you're only going to make payments on that $10,000 or that $20,000, not the full $100,000.
Okay, awesome.
So that's really nice. It's also nice that it has a lower payment than most things because it's an interest-only payment. So if you get it on a fixed home equity loan, that payment's going to be a little bit higher because it's fully amortized with interest and principal for the entire term.
Okay.
For that line of credit, for that first 10 years, it's interest only, which gives you a much lower payment, which makes it a little bit more affordable for some of those larger projects.
Awesome. And what would you say are some of the benefits of that fixed rate? So the home equity loan.
Yeah, that fixed rate has a lot of good benefits. So it's a fixed rate. So no matter what, that rate's not going to change for the entire term. So if rates go up, rates go down, your rate's staying the same, your payment's staying the same, and that term is staying the same. So it's really easy to budget that way and plan accordingly financially because I know every single month, just like my car payment, my home equity loan payment's going to be the same.
Okay, and I'm taking the full amount out, right, at the beginning?
Yep, you're taking one draw, getting all the cash at the same time, and then you're just making those payments.
Awesome. Okay, awesome. So I want to get a home equity loan, right? What are some of the things that you're looking for as, we're going through to get qualified? Okay. What are the requirements? What information do I need to bring in with me, I guess?
That makes sense. So the first thing we want to know is there equity in the home, right? It's a home equity loan. So in order for us to give that loan, we got to have a little bit of equity. Typically, we want to say 15 to 20% of equity in the home.
Okay.
Before we can start looking at lending. So for us, we try to stay below 85% combined loan to value. So what that means is, let's say you got a home that's worth $100,000. If you can lend up to $85,000 of that home. So if your primary mortgage is $50,000, then we can lend to get us up to that $85,000 total.
Okay.
We don't want to put our members in a situation where they're borrowing everything in their home. Just kind of takes care of them in the long run.
Okay.
So the first thing we want to look at is equity. The next thing we want to look at is just credit worthiness. So what's your payment history look like? Have you shown that you can make payments on these kinds of things? Are you current on all your others? Now, if you've got late pays or slow pays, that doesn't mean you can't get it. We'll look at those a little bit differently, but our goal is to try and find a way to get everybody into a loan. Maybe the home equity loan's not the best, but those are one of the things that we're going to evaluate when we look at that. And then we're going to take all your payments and we're going to look at your debt to income ratio. So you got a car payment, you got a credit card payment, you got a house payment, a couple other payments. We're going to look at all those plus this new loan that we're looking at, and then we're going to look at your income and come up with what we call your debt to income ratio. And we typically like to stay below 45, 43% debt to income ratios. And that just keeps the member in the best situation that they can make those payments and still live comfortably for everything else.
Okay, love that. So when you are talking about the equity, does this require an appraisal?
Yeah, so sometimes
Okay.
it does, sometimes
Okay.
it doesn't.
Just something to be aware of, right?
Yeah.
As we're going into that with expectations.
Yeah, definitely.
And then timeline, right? You said 2 to 4-ish weeks.
I think 2 to 4 weeks. It
Okay.
can go quicker if we can get all the documents that we need sooner. So income documents, homeowners insurance, anything else we're requesting. The quicker we get those documents, the quicker we can process those applications.
Okay.
But on average, about 2 to 4 weeks.
Awesome. What would you say, for people that have this home equity line of credit and we know it's variable, what's a best practice to just stay on top of that, as we're in kind of a fluctuating rate environment?
I think the best thing to do is, number one, check your statement every single month.
Okay.
That rate will change, and if that rate changes, we're going to notify people in that statement of what that rate change is and what that payment change is going to be. So I think that's the first thing. Number two is really just making sure you're paying a little bit extra if you can. That's really going to help bring that principal balance down if it's a home equity line of credit, and that's then going to help it make it a little bit more manageable if rates do go up.
Okay, wonderful. And then you're used to the larger payment anyways, right?
Exactly. So you'll be good no matter what.
Yeah, I love that. Do you have any success stories, right? You've obviously helped hundreds of Mountain America members when it comes to home equities. Any stories stand out where you're like, oh yeah, we were able to help this family, or this individual with this?
Yeah. So we had a member down in one of our local branches, and they came in and they were just struggling to make ends meet. They were making their payments every single month, but it was just a constant struggle. So one of our loan officers in the branch really sat down and listened to their story, found out they had some medical bills that had happened, just some other family things that really just took a toll on their finances, and they were just hanging on by a thread. And I want to say they came in just for a cashier's check to pay a bill. And someone took some time to really get to know their story, hear the details of it, and we learned that they bought their house maybe 10 years ago and didn't even know that they had equity in their house. They were just making their payment every single month and doing their thing.
Yeah.
So they sat down and really looked at it, and we consolidated every single one of their payments, their credit cards, their auto loan, their medical bills, some payday loans that they ended up having to take out, and we saved them about $1,600 a month, which for them
goodness.
was just they cried at the desk. They just didn't even know something like that was possible. They weren't even looking for it, but we were able to really change their lives and put them on such a better path. Now they're on track to have everything paid off significantly faster. We ended up putting them on a fixed mortgage, a fixed home equity loan. So they've got a consistent payment no matter what happens. That rate's not changing, that payment's not changing. They can budget to that, they can plan for that, and they're in a significantly better financial situation now.
I love that. So maybe for all of the people out there, right, that could be feeling that, we know, right, as a financial institution and in this environment, a whole lot of people are utilizing credit.
Yeah, 100%.
Right. So chances are we could maybe help.
Yeah, most of the time
Right.
we definitely can.
Okay. Well, JT, thank you so much for sharing your knowledge with us today.
Yeah, you got it.
Yeah, you've prepared us. We know how to take advantage of our home's equity.
Definitely.
Yeah. And thanks to all of you as well. We will see you on the next episode of Guiding You Forward.